Hello everyone, it's been a while. So today I would like to talk to you about US inflation and your business strategy. So you might ask me, so what's the price of egg got to do with the English crown succession plan? Well, there is a connection. See, US is going in for one of the biggest inflationary period right now as we speak, and the Fed is increasing rates to curtail the domestic inflation. Now, it's not going to be one rate hike, as you know. All the stock market indexes are proving that it's going to be a continuous process till they get the grip on this monster called inflation, which is at unprecedented 8% in the United States. So, what's the implication for you and me sitting in India? Well, if you are in the business which is funded by VC money or hoping to be funded by VC money, you need to listen to it very carefully. The inflation has triggered the Fed to increase the interest rates by 0.25 basis points or 0.50 basis points. And that simply means that US is now giving a better return on investment through government bonds and long-term deposits. This will encourage the pension funds from North America, largely the US pension funds and the Canadian pension funds, to move the money out of risky markets like India and move it back to the home base, so that the benefit of that 0.5 and the promise of more increase in the rate is going to be working for them. So that's what we have seen in the last few weeks, that money is flowing out of India like nobody's business. That's got a direct impact on the VCs, because VCs had practically free money flowing their way, and that money they are deployed in the market in terms of funding with insane valuation. Now that money is drying up and what we call the VC winter is coming, or in fact it's rather here, the VCs will be forced to look at the business models of companies. Gone are the days where you are going to be funded on the back of more accumulated losses, as long as you are showing a positive trajectory in terms of customer acquisition. So your aggressive growth rates are not enough for you to attract the next level of funding. So what does that mean? You have to show the path to profit. A path to profitability is something that every VC will demand from all businesses. Even if you are a business which has been around for long and been funded maybe 2 rounds, you're not going to find it easy to raise the next level of your capital or next set of your capital if your business plan is based on acquiring customers at scale with deep discounting, incredible amounts of money spent on performance marketing, bleeding through all your orifices but still acquire customers at scale. Now, what's the issue? The customers have come to you, or you acquired the customers not for any of your sustainable proposition. They came to you at a price point which was incredibly attractive for them, and it's a transaction. You're not going to have them the moment you stop giving them that deep discounted offerings. Most of the businesses that I find, right from fintech, edtech, all of them are fundamentally, they fall into this bracket. So it's time for you to look at path to profitability, and here brand plays a very important role. The customer is going to come to you because of your value proposition, your positioning, your brand personality, and your brand values. So if you haven't built this, and if you were happy that you were getting customers irrespective of whether you have a brand, okay, don't mistake your awareness for brand positioning. You might be known, but you might not be known for things that the customer care about. They just bought at that price point. It is time for you to start looking at a value-based customer acquisition. The customer has to buy into the true value of your brand, and that is your path to profitability. Because your current strategy is not going to take you too far. In fact, you don't even have a few months left to play this strategy. If you don't get funded again, you're screwed. So my sincere request to all the business owners out there, the CEOs, the founders of company, is that like you agonize over your cash flow, please agonize over your brand now, because that's the pivot that you need to do now. It's not too late. You need help. But continuing on your current strategy is doomsday. So the US inflation has forced you to change your strategy. Your VC friends will have to sing a different tune from now. I wish you all the best, and more of these videos and thought processes will be shared with you in the coming weeks. I would like to hear your comments on this point of view.